America's $33 trillion debt bomb. What happens when the dollar fails? It was the safest bet on earth. For nearly a century, the United States of America wasn't just a country. It was the world's bank. Governments, corporations, even rival superpowers. All of them trusted one thing above all else: the US dollar. They tied their savings to it. They backed their currencies with it. They built their economies on top of it. Because they all believed America could never fail. But what happens when that belief starts to crack? Right now, America owes more than $33 trillion, more than the combined economies of Europe, Africa, and South America put together. And for the first time in decades, the world is starting to ask a terrifying question. What if the US dollar isn't as safe as we thought? Because this isn't just America's problem anymore. This is a global ticking time bomb. And when it goes off, it could take the entire world down with it. Segment 1. How America became the bank of the world. It didn't happen by accident. America earned the world's trust. After World War II, as Europe lay in ruins and Asia struggled to rebuild, the US emerged as the undisputed economic superpower. Its economy was booming, its military unmatched, its currency unstoppable. And so, in 1944, the world made a choice. At a historic meeting in Bretton Woods, New Hampshire, 44 nations agreed to back their currencies to one thing: the US dollar. From that moment on, the dollar wasn't just America's currency, it became the world's reserve currency. And with that status came unimaginable power. Anytime the US needed money, it didn't have to raid its gold reserves, or raise taxes, or even cut spending. It could simply issue debt. US Treasury bonds, and the world lined up to buy them. Japan, China, the United Kingdom, sovereign wealth funds, pension funds, central banks, everyone wanted a piece. Because these bonds weren't just paper. They were backed by the full faith and credit of the United States government. The safest bet in the financial world. For decades it worked. America spent, the world funded it, and the system thrived. But there's one thing every system fears: overconfidence, and America's debt was about to spiral out of control. Segment 2. The debt addiction begins. The cracks first appeared in 2008. The global financial system was on fire. Banks collapsed, markets froze, panic spread, and America, the so-called rock of global finance, was at the center of the disaster. The solution? More debt. In the span of months, the US government unleashed an economic rescue mission of historic scale. $700 billion to bail out Wall Street. $831 billion more to jumpstart the economy. Trillions injected into failing banks, crumbling industries, and struggling households. It worked. For a moment. But America had crossed a dangerous line. It had learned that debt could fix anything, at least for now. And the world? The world still trusted the US dollar. Interest rates stayed near zero. Demand for US bonds stayed strong. And so, America kept spending. Year after year, the debt piled higher. But no one sounded the alarm, because borrowing was cheap, money was flowing, and the system looked stable. But here's the thing about cheap money. It never lasts forever, because when the next crisis hit, America didn't just borrow big. It borrowed on a scale the world had never seen before. Segment 3, the pandemic spending spree, 2020. The world stopped. COVID-19 shut down entire economies. Supply chains shattered. Businesses collapsed overnight. And once again, America turned to its most powerful weapon: debt. Stimulus checks, unemployment benefits, small business bailouts. Multi-trillion-dollar rescue packages rolled out at record speed. By the time the dust settled, America had added over $5 trillion more to its national debt. The single largest debt surge in US history. The numbers were staggering. $31 trillion in total, more than 100% of the nation's GDP. For the first time since World War II, America owed more than it produced in an entire year. But the bigger problem wasn't just the size of the debt. It was the world's growing doubt that America could ever pay it back. And for the first time in decades, that doubt began turning into action. China, America's largest foreign creditor, started selling. $340 billion in US treasuries dumped in less than 2 years. Japan followed. The UK, Germany, even America's closest allies began quietly backing away. What started as a ripple was quickly turning into a wave, and if that wave becomes a flood, the entire financial system could break. Segment 4, the global bond sell-off nobody is talking about. This isn't just a bad headline, it's a global shift, hiding in plain sight. For decades, countries couldn't buy US debt fast enough. It was the cornerstone of their financial security. But in the last 3 years, the script has flipped. China offloaded $340 billion. Japan, another trillion-dollar bondholder, started selling too. Britain, Germany, even Canada, longtime allies, quietly reducing exposure. Why? Because the unthinkable question is no longer unthinkable. Can America actually afford this debt? Every year, the US government needs to borrow more than $1 trillion just to pay for programs it already can't afford. And here's the kicker. The government now spends over $3 billion a day just on interest. Let that sink in. $3 billion a day gone. Before paying a single soldier, before building a single bridge, before providing healthcare or education to a single citizen. This is the highest debt interest burden in American history, and it's still rising. If the sell-off continues, borrowing costs will skyrocket, spending will tighten, markets will panic, and the once safest asset in the world could become the most dangerous risk on Earth. Segment 5. The real cost. $3 billion a day in interest. This is the part they don't tell you on the news. Every single day, America burns $3 billion just to stay afloat. That's not fixing roads, not building schools, not advancing healthcare, just interest payments to creditors around the world, and it's about to get worse. Over the next decade, the US is on track to spend over $10 trillion on interest alone. That's $40,000 per American citizen, gone before a single dollar reaches their community. And while Washington bickers over tax cuts and budget ceilings, this ticking bomb is draining the nation's future. Right now, nearly 1 in every 5 tax dollars goes just to cover the interest on America's debt. That's nearly double what France pays, almost 4 times what Greece pays, a country once synonymous with financial collapse. And here's the terrifying part. It's still not enough. Because as more nations sell off US debts, borrowing costs rise even higher. And the US is forced to borrow even more, just to pay yesterday's interest. This is what a debt spiral looks like. And if nothing changes, the dollar could collapse under its own weight. But this isn't just a US problem. Because if the dollar falls, the entire global economy goes with it. Segment 6. The inflation time bomb. This is where the danger spreads beyond Wall Street and hits every American household. Because if investors lose faith in US debt, they don't just dump bonds. They dump dollars. And when that happens, the value of the dollar begins to fall. Hard. Think about what that means. The US imports $4 trillion worth of goods every year. Everything from smartphones to medical supplies, food to fuel. If the dollar weakens, those imports get more expensive overnight. Groceries, gasoline, electronics, housing materials, and everything costs more. Inflation, the very thing the government tried to fight, comes roaring back with a vengeance. And the everyday American, they pay the price. But the pain doesn't stop there, because a crashing dollar would send shockwaves across the globe. From Europe's banking system, to Asia's manufacturing sector, to emerging markets already drowning in debt. The dollar is the backbone of global finance. And if that backbone breaks, we're not just talking about a recession. We're talking about a global economic realignment on a scale the world hasn't seen in over a century. And the worst part? The cracks are already showing. Segment 7. The geopolitical domino effect. Because when the dollar stumbles, it's not just America that falls. The euro, the yen, the pound, all of them are propped up by US dollar reserves. For decades, nations held dollars to stabilize their own currencies. It was the ultimate insurance policy against financial collapse. But what happens when that insurance fails? If the world loses faith in the dollar, those reserves become worthless dead weight. Currencies collapse, markets seize, banks scramble to survive. And the ripple effect? It could take down the entire global economy. We've seen smaller versions of this before. Argentina, Greece, Venezuela. But this is the United States of America, the anchor of the world's financial system. the bedrock of international trade, the foundation of global trust, and that foundation is starting to crack. Meanwhile, rivals like China are moving fast, pushing the yuan as the next global currency, encouraging nations to ditch the dollar, forming new alliances outside US influence. Some are already trading in gold, euros, and digital currencies to hedge their bets against the dollar's decline. The age of American financial dominance is under threat, and the consequences? They could reshape the global order for decades to come. Segment 8. Can America defuse the bomb? So, can this debt bomb be defused? In theory, yes. But in reality, both options are brutal. Option 1. Massive spending cuts, slashing government programs, shrinking military budgets, raising taxes, politically suicidal, economically painful, but mathematically necessary. Because without real cuts, the debt keeps growing, the interest keeps rising, and the trap keeps tightening. But here's the other option: printing money. The US could simply create the dollars it needs to cover the debt. No cuts, no taxes, just more dollars on paper. But that's not a solution. That's economic suicide, because printing money kills trust. And trust is the only thing holding this system together. If the world sees the US flooding the market with worthless dollars, they'll run fast. Bondholders will sell, currencies will collapse, inflation will spiral out of control, and the dollar could fall from its throne. So here we are, $33 trillion in debt, a global economy on the edge, and America still spending like nothing's wrong. The question isn't if this bomb goes off, it's when, and when it does. The world will never be the same again. Watch our next video where we explain on the billions of dollars losses faced by Meta.